In this video, we will be speaking about how you're supposed to be protecting your capital. So I suggest that you stick to the video until the end because it's a very important thing that you have to be doing in order to succeed when you're trading and become consistent in the market. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms every day. So I suggest that you subscribe and I will see you in the video. Today, I want to speak about when is the right time to go risk-free on a position. So when is the right time to move your stop loss from the original price to your entry price. So basically protecting your capital and going risk-free on the position, meaning that if the price will go back down to your entry, you will exit the position break even. So you have only to gain from that position because you don't have any open risk in the market for that position, meaning that you can either make money or worst case scenario, you break even. But I know very well that it's a bad feeling when you think you made a smart move by going risk-free on the position. So moving your stop loss at entry price and then the market goes down, hits your entry, you exit the trade break even, and soon after the market hits your entry, the market just explodes back up and hits your overall profit target, but you exited the position break even. And I know that is a very bad feeling. So how we can avoid having that unpleasant situation by properly going risk-free in the right time, okay? When we have the proper conditions that I would be speaking about in this video satisfied. So first of all, there is one very basic technical analysis concept that I need to explain in order for you to understand what I will be speaking about in the video. Now, you all know that if you have a structure level in the market, okay? The market, for example, is moving to the upside. It hits the level and it creates a retracement. So after an impulse, the market creates a retracement. Now, this thing here that the market just did is creating a resistance level. Now, if the market will break this zone back to the upside, this previous resistance will be turned support, okay? So after the market will go and retest the area, this previous resistance will be turned support and the market will continue with the next move to the upside. Just a very basic technical analysis concept. And again, this level here is now the previous resistance, which the market is supposed to respect as new support. So again, previous resistance turns support. A very basic concept when it comes to a trending market, but you have to know it to understand what I will be speaking about in this video. And same thing to the downside. If you have a market that has a structure level and the market is moving in a downtrend, so creating lower lows and lower highs, the market tests the zone, makes a retracement, creates a support. If the market will break this support to the downside, this previous support will be turned resistance on the retest for the continuation to the downside. And again, this previous support will be turned resistance for the continuation to the downside. And the trend will end when the market will fail to respect this new resistance and basically create an inverted head and shoulders in this case, or a regular head and shoulders in this case. So basically failing to respect that previous resistance turn support in this case, or support turn resistance in this case. So very basic concept that you need to know in order to understand this thing. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. So in order to avoid that after you go risk-free on a position, the market, let's say for example, you buy from here, okay? Let's say you buy from here, exactly from this level. You have a stop loss below the low, the market is going in your in profit, okay? And what you do, you move your stop loss at entry price, therefore going risk-free on the position. But then what the market does, the market goes back down, hits your entry, so where your stop loss in this case is, taking you out of the trade break even, and then the market continues in your profit zone, but you are out of the trade break even. Now, this is a very bad situation. And why did it happen? Because your entry is not protected by structure, meaning that the best way to go risk-free on a position is going risk-free when your entry is protected by new structure. So if you entered here and the market is moving in profit, in your profit zone, should you go immediately risk-free on the position? No, because the market hasn't created new structure, meaning that the last structure that the market has created is this previous resistance, which is now turned support here. So if the market will actually go and test this previous resistance, now turned support, this is exactly your entry. And actually the market is supposed to go and test this zone, meaning that the worst thing that you can do in this case is actually go risk-free, because the market is supposed to go and retest your entry. So you can't go risk-free here. Let's say the market goes back down, hits your entry, and continues to move to the upside. Can you go risk-free yet? I want to know if you're starting to understand the concept. No, you can't go risk-free yet. Here, can you go risk-free? No, you still can't go risk-free. Now you can go risk-free. Why? Because at this point, you have a new structure level which is protecting your entry. You have this previous resistance here, which is turned support here. Okay, very, very important that you understand this concept. You now have this new previous resistance, which is turned support at this level, meaning that now if the market will make a retracement, okay, now from here the market is supposed to continue to the upside. So you can move your stop loss at entry, because if the market will actually go back down and hit your entry, therefore taking you out of the trade break even, it's a good thing, because probably this setup will fail because the market has broken structure. And at that point, what should happen is that the market should create an inverted head and shoulders. Therefore, you're happy to exit the position at break even, because the setup has a high probability of actually ending up being a loss. So let's go and give a live market example of this concept. Let's take the last setup that I executed with students on CAD/CHF this week. Actually, it's not the last setup. The last setup is another trade that we just closed for a nice profit. But the first setup that we took this week with students was CAD/CHF. Now, it was a long position. Okay, let me give you the full analysis of what we had on CAD/CHF when we executed this trade. So from a weekly perspective, the situation was this. Okay, we had a market that had created a nice impulse, a nice correction, and we could expect a deeper correction because this candle here had created. Now, I made a full video also here on YouTube about this candle. When you see a candle like this, you expect the next one to fill in the wick. And what we also had, why do you want to see the next candle fill in the wick? I'll try to keep this as educational as possible. You want to see the next candle fill in the wick because from a daily perspective, you have an impulse, you have a correction, and you want to see the continuation to the upside. So the wick, in other words, that you see on the weekly is the retracement that you see from a daily perspective. So we want to definitely see the market make this move to the upside. Now, from a COT perspective, what we could clearly see was that we could definitely expect from a CAD perspective. If you look at the COT data, so the commitment of traders, what big banks and institutions are doing at the moment in the market, we could see that overall on the CAD, yes, they were closing longs, but they were closing even more shorts. And given the fact that we had a great transition to a negative net positions from an institutional perspective on the CAD, we could expect some relief, let's say, in the weakness of the CAD, therefore a move to the upside on CAD/CHF to complete this impulse correction and impulse pattern to the upside. What we also had was from a daily perspective, this previous resistance here, and again resistance here, now turn support at this area, all confirming a possible nice move to the upside from a daily perspective. Going down on the 4-hour time frame, when did we execute our position? Now, obviously, I can't share my rules for entry, that is part of the mentorship program, but what I can share is a very basic technical analysis concept. We entered after the market broken with this green candle here above this structure, with a stop loss protected by the new structure that the market had created. Obviously, structure is not enough alone to provide a valid entry, let's say. but it's a good thing to be following and just a basic technical analysis concept that you need to know. Now, when did we go risk-free on this position? During the move to the upside. Did we go risk-free here? No, because the market could still easily go and retest our entry. Did we go risk-free here? No, because the market could still go and easily retest our entry. But we did go risk-free when the market broke with the close of this candle above this previous resistance here. Why? Because at that point, this previous resistance here is turn support here, therefore protecting our entry. And that is exactly how you go risk-free, by being quite sure that if the market actually goes and takes you out break even, it's a good thing because it means that the setup will not work out. Therefore, you are protecting your capital. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. The link is in the description. It's a very complete program. You first learn all the rules of my rule-based strategies and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply the strategies with entry, stop, and take profit, as well as answering every single question that you have every day. So it's a very complete program. I suggest you go and check it out. The link is in the description and I will see you in.